Hey there, traders. Hope you all are doing good. If you're new to the channel, my name is Shaun and I'm an equities trader. And in this video, I wanted to give you guys a walkthrough of a trade that I had taken a couple of days back, which ended up making me $1,200 in around 10 minutes or so. And this is not a standout trade. It's another average trade. In fact, if anything, this trade could have been a lot better. I could have done a lot better on this trade. But I thought it would be a good trade for me to show you guys and walk you guys through, and not just the trade itself, but I also wanted to give you guys a walkthrough of my entire trading strategy and process. So this video is going to include things like how do you find good opportunities, how do you plan your trades, how do you execute your trades, how do you manage your positions and exit your positions. So basically the whole thing. And I believe this video alone is gonna be more valuable to you than most courses and programs out there. So if you like trading related content or helpful trading related content, consider hitting the like button and subscribe to the channel to see more. And with that being said, let's actually hop onto the screens and get to it. The very first thing every single day when I'm looking to find good opportunities to trade is I look at SPY. It's the ETF for S&P 500. This is the daily chart. This is the 30-minute chart. So this is what I'm actually looking at. And when the market is just about to open and it's still pre-market, usually the market is going to be gapping up or gapping down, and it indicates you that are we going to be moving higher or low for the day. So that's essentially, I'm trying to get a good understanding of what could happen. Now, this is not a decision-making factor for me at this stage, but I generally want to be in the same direction as the overall market is going to move. And the reason being is 80% of the stocks out there in the markets, which is 80% of 20,000 odd stocks out there, are going to move in the similar direction as the overall market. And I just simply want to be in the similar direction because now the odds are slightly more in my favor. It doesn't matter as much as you'll just find out as we go along in this video, but I just want to be in similar. So S&P 500 is an ETF that I track. QQQ is the ETF for NASDAQ that I track. Kind of same story with both of them, and IWM is another one that tracks the Russell 2000, the small cap stocks. So this is what's happened. And these all three are the scanners that I use. So this is a low float scanner, gapping up scanner, gapping down scanner. So once I've gotten a gauge of the overall market, I want to sort of gravitate towards it, but I'm not making a trading decision just yet or just shortlisting the opportunity. I'm just getting a feel for it. And if you see a lot of tickers and it seems intimidating, it's because I'm recording this video on a Sunday and all these moves have already happened on a Friday. So, but usually I do my stock research, or I try to find good trading opportunities in the morning before the market's even open. So while it's still pre-market, so from 8 a.m. Eastern to about 9 a.m. Eastern, that's when I'm doing all my digging and finding good opportunities. And at that time, there are only going to be like 2 or 3 tickers over here, maybe for the low floats, 2 or 3 tickers, maybe 3 to 5 tickers for the mid cap and large cap stocks, and another 2 or 3 or maybe 5 stocks that are gapping down, and these are again mid cap and large cap stocks. So this is what I'm generally getting at. And once I've shortlisted these scanners, and all my scans are really included, as you can already see, but they're just stocks that are gapping up. So they're trending, or they are starting trend higher before the market's even open, right? So I'm only looking for stocks that have at least gapped up 3% or higher, or in terms of we're looking for short opportunities, I'm looking for stocks that have gapped down 3% or lower. And key over here is I don't want to just see the gap. I also want to see elevated volume. So if a stock generally trades about an average of 1 million shares a day, at this day, it's already traded quite significantly higher volume before the market's even open. That's what I'm actually looking for. That is going to be a general sign that a lot of people are paying attention to the stock, or a lot of traders are paying attention to this stock before the market's even open. So once you find your 2, 3, 5 tickers, that's where I move to the next stage, or next step, is find out why exactly the stock is moving, what exactly is causing this the stock to grab so much attention from other traders. And this is where the fundamentals of the stock come in. And although you see these technical levels and all that, this means nothing if your fundamentals are not right. I strongly believe in fundamentals, and I don't think prices move because of these levels or candle patterns or anything like that. Prices fluctuate because of the fundamentals of the market. Now, I don't want to say too strongly about that because there are hedge funds out there who are trading investors' money based on astrology. So I don't want to push it too far, but yeah, I think most people do like to believe in fundamentals, and these prices do fluctuate based on fundamentals, not just candle patterns or technical patterns and all that stuff. So that's just the sort of camp I fall into. I trade based on the fundamentals of the stock. So once you find out these stocks, I like to use this tool called Benzinga Pro, and there's another news. So basically, it's a news feed platform. So any event that happens, it's just gonna keep popping your news feed and keep giving you alerts and news. So it makes your life a lot more easier when it comes to researching your stocks. This is another stock that I was trading the other day. So you see all the news that just pops up about the stock. You can go into more detail once you click onto this one. So it's over here. If we Microsoft, let's say. So all sorts of news related to Microsoft, and if you just click on this Microsoft, why isn't it doing it? Usually you just click and Microsoft opens over there as well, but today it just decides to misbehave, I guess. So you see a lot more information about the company itself. So that's and I'm not trying to be an analyst per se. I'm just trying to quickly run through the headlines and what's actually causing it. If it's a major news, it's just going to be all over the place. So I'm just quickly going through the headlines and things of that nature over here. And this is one platform that I use for news, and the other one is briefing.com, which is really good for mid-cap and large-cap stocks. That's also another news feed that I use. But these tools are on the premium side, and I wouldn't say they're mandatory. I was trading without them for a really long time. There are free tools like Yahoo Finance and MSN and Finways and all those kind of services are there, which are completely free, and you can do your research. Only thing is you have to jump through a few different websites and do a bit more work, I suppose. And yeah, so basically these are the services I use. Now, getting back to the point, it's simply what is popping up on your scanner, and the scanner is just simply showing you stocks that are gapping up and gapping down. It narrows your list of stocks, maybe from 20,000 stocks out there to maybe 5 or 7 or 8 good stocks. And then you do your research of your fundamentals. If the fundamental news catalyst is something that makes sense to you and you feel confident on, such as its earnings, or FDA approvals, and maybe bad earnings, or mergers or acquisitions and things of that nature, it is something that is telling you that this stock should be valued more. Or now, I'm not going to go into valuation because that's not what I'm really looking for. I'm just simply looking to find a reason why is this stock already getting so much attention at this place. So let's actually go to the trade itself, and I'll give you that real example of that trade. So these are the screenshots of the trade that I had taken. So again, as always, on that trading session, the SPY was already gapping lower. I believe there was a market event that took place. I think it was jobs or something or the other, which caused the market to actually drop lower. And if you just see over here, before the market opened, this is where we were at, and the economic event had already taken place. So I had a healthy bias towards finding more short opportunities, but I ended up finding more long opportunities. And those were much better opportunities. So I just traded to the long side. And the stock I ended up trading was this CEG. It's an energy stock. Now again, remember we were talking about gapping up and gapping lower. So the previous trading session, the stock had closed somewhere between 240 to 250, so maybe around 245, something around there. And the next day, this news comes out that they are buying another company. They are acquiring another company for 26 billion or 22 billion. The amount is not very important, and don't quote me on that because it's been a couple of days, so I've forgotten that. But essentially the news was they're acquiring this other company, again an energy company, and they're anticipating a lot more demand for energy because of the AI stuff going on, and AI companies need a lot more compute power and a lot more electricity. So they anticipate a lot more energy demand going forward, and them capturing or acquiring these other competitors out there, now they would have the ability to capture a lot more market. So it was a very healthy news for the stock. Investors and other traders really loved this news that they're spending 26 billion to acquire this company, and I believe the deal was half cash and half in stock. So it was a very positive catalyst for the stock, because now this move of the company is going to help them capture a lot more market share. So also going back to the previous point, as it closed around 245-ish, right now around 8:30 a.m. in the morning, it was trading somewhere over here between 280s, 270s, somewhere roughly. And we'll be going through the live recording of this trade, so just bear with me for a second while I explain you the concept. So it had already gapped up maybe 5-10% or something, whatever this is, 245 to 275. I'm not going to try and do the math and embarrass myself over here, but it had already gapped up. It had already traded a lot of volume in the pre-market, so there was gapping up, there was elevated volume in the pre-market, and then there was a news catalyst that I could, as a trader, get my head around, and I understood this fundamental that how this company could benefit from this particular move as well. And the price action was confirming that what I'm thinking is correct. Now that is not a reason for you to just jump on the trade. Now we move on to the trade planning side of things. Now I am a firm believer on keeping things very simple. What you see on my charts is barely any indicators. There's just some bare minimal support and resistance levels. Some people like to call it demand and supply zones. That's what it is. So I identified these two key areas over here. 267.84 was one of the key levels that I saw from the previous session over here. And another level was about 285.52. This was another zone that I saw because of obviously these highs. And these were the previous all-time highs for this stock. And if it breaks higher from 285, this stock would be essentially making all its all-time new highs, which is also going to be attracting a lot more new buyers to come in during the trading session. And since we didn't have anything else about this, I wanted to target the 300 psychological number. It's a psychological number. People like to just get out over there or enter over there and things of that nature. So those things happen. So that was a pretty easy, simple plan. And every single time, guys, like if I walk you guys through any other trades of mine, or even if you see previous videos, it's always going to be this. Price can only do two things. Actually three things. It could come down and move higher from here at support, or it could just break resistance and continue to move higher. And the third thing is it could just stay sideways. Now, because it's already gapping up, because it's already elevated volume, now there is a catalyst which is positive for the company. My sole bias towards this stock is to only and only go long, and I'm not looking to short this stock. And the only way I'm going to look to long this stock is either it comes down to support, as it was trading somewhere around here in the pre-market, and I'm waiting for the market to open and then trade it. So it could either come down, take support, and then start moving higher. In that case, my target would have been the next key resistance, which is 285 in this case. Or if it breaks through the resistance and starts moving higher, then my targets are around 300s. Pretty simple plan as always, and this is it. And let's actually take a look at the live recording of this trade while I'm executing this trade. And what you see, those were my charting platforms. This is my execution platform. It's called DAS. It's pretty good and really nice when it comes to speedy executions. But enough about that. So remember, so what you see over here is a daily chart. This is a 5-minute chart, and this is a 1-minute chart. And this is of course the tape and the level 2 box. So remember, we identified these two areas, which was 267 and 285, these two levels. Now I'm just waiting for it to, and still it's pre-market, 1 minute more to open by the time I can see over here in the recording. So I'm just waiting for it to do either two things. It could come down to support and start moving higher. That's where I'm going to participate in the stock, go long. Or it could break through resistance, and that's where I'm going to start getting long and look for my entry tools to be met. And basically target the next area. So if I just hit the play button, let's see what happens. It's still pre-market, so I tend not to trade the pre-market. I only like to trade the open. Just personal preference, actually. There's a funny bell sound my software makes when the market actually opens. So market's open, and let's see what it does. I'm just waiting for it to either come down to support. It could still come down, but I would like it to break through resistance since it's so close to the resistance. That would just show me a lot more healthier signs to go long, because it's already at resistance. It wants to break out and move higher. And sorry about that sound. That was the alert during this trading session from my platform. So I was looking at some other stocks as well at the same time. And it's starting to break out. And this is still, guys, it's not a reason to enter yet. It hasn't confirmed that it's already broken out. I'm just being patient. Most traders just get in, and then when the breakout actually fails, they're just stopping out for no reason. You have to be patient with your position. And the small line that you see is VWAP. This is, I'm just going to pause it. So VWAP is a great indicator, and what makes it great is because a lot of institutional traders like to use it. These are hedge funds and other big institutions who are placing really large bets, and they generally like to use this. And there's a whole reason, and this video is not about that. But if you know these reasons, you'll be like, okay, this is a very reliable indicator. And personally, for me as well, in my trading, I've found it to be very reliable. So I do like to have this as one more check in my favor. And I like the fact that market opens, it rejects VWAP. And as you see, if I just rewind just for a bit, just over here, as you see, as soon as we come to VWAP, all sorts of buying activity. You see all the green prints going in. And when the red prints come in, we don't come down so aggressively. And when the green prints come in, we're just moving a lot more aggressively higher, plus the offers and bids are all there. So these are all the signs of strength for me. And that's the reason I just entered my position with 100 shares. And with my stop just being around 283. And the entire position for me was about no more than $300. That's risk parameters that I'm personally giving myself. So I've risked about $300 on this trade. After seeing all sorts of signs of strength, plus the catalyst and trade plan being met over here. And now just simple. After that, all I have to do is just wait, set my stop, and let it do its thing. And all I'm going to watch for it to, just give me reasons to move my stops higher and trade my stops higher, or it breaches my target and just takes me out, or maybe it just comes all the way down and just stops me out. But yeah, at this point, I'm just setting my stop loss, and I like to put hard physical stop losses. Just makes it a lot more easier for me. And that's it. It's just waiting, guys. Just keep on waiting. And at the same time, by the way, you see that I had another stock, which was Delta, DAL. I believe they had announced earnings on that day, and that was a really positive earnings results for them, positive earnings surprise. And I wanted to enter, but while I was placing stops and monitoring this stock, I actually missed this move. The plan was pretty simple again, as always. It comes down to 65 or it breaks about 67, and then I get over there. Very similar plan, pretty much on all trades. And I actually ended up missing this trade. I tried to chase this trade, but at last minute I just realized that I'm chasing and I need to just let it go. And that's something I did. And this is exactly what trading discipline is all about, guys. Like, when you miss the opportunity, don't chase, don't overtrade and things like that. Just know yourself. And in this case, I just let it go. I believe I'm still trying to calculate position size, and I'll be placing a trade, but I'll just cancel it right away, realizing that. And yeah, before it gets filled, I just canceled it. Although I would have made some decent money on it, maybe another $1,000 or so, but yeah. Anyway, so as this stock is just going higher, constantly going higher, all I'm doing is just looking at other things, waiting. That's what good trading is all about. Just have your plan, execute your trades when all your entry rules have been met, and just let it do its thing. Don't fiddle around with it too much. And I did exit this trade a little bit earlier, as you'll see in just a bit, but essentially that's what you're trying to do. Find out good opportunities, plan your trades, trade the plan, and that's it. And let the trade do its thing. And without making this video too long, I'll just forward it just a little bit. And again, as you see, we're coming on to VWAP and we instantly get rejected. The red prints are not as effective, but when the green prints come in, they're just a lot more oomph to it, and we move higher a lot more sharply. So that's a sign of strength. See, when the red prints come in, we're not moving so low, but when the green prints come in, we move up a lot more sharply. And look at the volume over here on the 1 minute chart. There's so much volume on when we're moving higher. And this was the very first sign that some people are starting to take profits, but buyers are not giving up just yet. So that was again a sign of strength for me. And all I'm thinking at this place is I want to add more. I want to buy more stock. So I bought in 50 more shares, making the total position size from 100 shares to 150 shares now. And this is also an expensive stock. Like, it's $391. So it's an expensive stock. So you have to trade with smaller numbers, but your risk in terms of dollars cannot be more than what you've allocated to yourself to. And as I add the position, by the way, I'm also going to be trading the stop, because now it's taken gave me a new higher low, so I can trail my stops over here. So although I've taken a bigger position, my risk has actually gone down from 300 to 150 or 180, something like that. I'm just letting it do its thing. I'm still paying very close attention to it. If the characteristics of the price and the tape changes, that's where I have to act. But till the time it continues to do its thing, until my target, I'm just going to let it run. And I don't like there's so much weakness coming in already, and that's where I decide to, in just a bit, I'll probably decide to get out of the position before actually 300 or my target has reached. And this is where I could have done a lot better. I could have just been a lot more patient and stayed until 300, because my exit rules hadn't been met, which was either I get stopped out on my trading stop loss or my target hits. Because see, you still can, we're still able to see strength, but not as aggressively as what we saw just a bit more earlier. I'll just fast forward slightly so the video doesn't become too long. And I just want to get filled to as best price as possible. I'm trying to hit the offers so I get the upper price, but which didn't happen. And I'm 98 round numbers, and we immediately got rejected after 298. And that's where I just wanted to get out a lot more quicker, and I just hit the bids, get out, pay the spreads, and get out basically on the stock much more quicker. And I think the whole trade just made me about $1,200 or so. Maybe around what, 1, 2, 3, 4, 5, 6 minutes this trade lasted. So just to go over the whole thing again, essentially the trading process is, well, prices do tend to move based on fundamentals first, and technical analysis is used as a timing mechanism, right? You time your trades based on technical analysis. Just to go over it again, when you're looking to find good opportunities, you can narrow your opportunities down from 20,000 stocks out there to 3 or 4 good tickers, good names, and only looking at stocks that are gapping up, gapping down on elevated volume. So volume is telling you that a lot of traders are actually paying attention to this stock. Then you go do your own research, and if the catalyst and the fundamentals of that or the news make sense to you, and you can commit your capital confidently on that particular opportunity, that's where you need to start looking at technical analysis and plan your trades. And like you just saw, like, all my trades are going to be based on these basic support and resistance levels, and they have sort of been the best in terms of profitability for me compared to some of the fancier, more fancier looking things that I used to trade, and it never made me any money. So I hope you were able to gain some value from this video, and I hope you were able to see like how simple trading can really be if you know what you're trying to do and know your steps that you need to take in order to make one good trade, and you have clarity around your own strategy and your own process, and that's where trading starts becoming simple, more fun, and less frustrating, and so those things. So again, I hope you found this video helpful. If you did, consider hitting the like button, subscribe to the channel to see a lot more trading content similar to this one. And if you're interested in going into a lot more in depth about how do you trade profitably, and you want to learn a lot more about trading in depth, there's a link in the description below. Get in touch with me. We can speak about it, and you can find out a lot more about the interactive bootcamp that I'm running. So with that being said, I'll take your leave, and I'll see you in the next one. Take it easy. Cheers. Bye-bye.